let's talk about that. Let's talk about inflation. Let's talk about the Fed, not including Lisa Cook, and more with Ben Emons. He is founder and chief investment officer at FedWatch Advisors. Ben, really appreciate you coming in on a Friday. Thank you very much.
You're welcome, Ryan.
I'm not going to ask you to adjudicate this or get into the politics of it, but does the outcome of this case, the independence of the Fed, whatever it is, does it matter to how we should look at the Fed as a rate-making and policy institution?
It does matter, obviously, because if it gets really influenced by outside forces, then yeah, it could be, right? We have, currently the rate cut priced in. You see a lot of people within the Fed shifting towards rate cuts. And you could debate about whether that is politically influenced, yes or no. Ultimately, the markets, I think, really care about what's the Fed going to do here. Are you going to cut or not, and by how much? And the influence in itself will then maybe be accounted for if it's the wrong timing, right? If they're cutting and it turns out to be the economy was much stronger and didn't need any cuts. So I think that's what the market will trade.
Steve Grasso, I want you to jump in on this too. I'm going to say something. We got Julie Beal, we got Mike Coe. I'm going to say something a little bit crazy because why not? It's Friday.
Sure.
That's what I do. Which is, let's say you're leaning toward a Fed cut. You remember the Fed, right? You know the president wants the Fed to cut rates. We know that Jerome Powell is sparred with the Fed, or with the president, rather. So I wonder, is there any part of Ben Emons that thinks, well, guess what? Now you're coming after one of our own, Lisa Cook. We're not going to give you the rate cut. Because they know that's kind of a gift to the president, even if they think that that's what we need to do, like, is cut rates.
That sounds political to me.
Yeah.
That sounds like they're politicizing the Fed as well. So it's a two-way street.
Yeah.
So, but I'll let Ben answer that question.
Yeah,
there's probably no way to tell, but I'll.
Yeah, I mean, it would be really an interesting dynamic if that's the case. But I think, Brian, it comes down to what happens next week with payrolls. Let's say that number is really strong, right? That will give them the reason to say, guess what? It wasn't as weak as we thought. We can maybe hold off here. And you get that, political dynamic. But ultimately, they will use the data to say, we're going to cut or not cut, I think.
So when you look at the last couple of inflation numbers that we've seen, Ben, when you take out housing and shelter costs, because that's the big thing, in CPI, it's a third of CPI is housing and shelter costs. So that skews it because mortgage rates don't seem to come down. But when you look at the last one that we had, that was the core or the super core.
Super core, yeah.
That tells a different story. But I would say that next week is probably the most important week as far as data, because we're going to find out in that dual mandate, has the jobs number, has full employment taken precedent over stable pricing?
Yeah, that's right, Steve, because it's so much tied into that labor data now. That's the argument to make this rate cut. That's what Waller and Bowman started, and that's what Powell now signaled at Jackson Hole. Even now Williams has come to that point too. And in the meantime, we have this inflation data that does look stickier. It does look a little harder at the top, at least. And the supercore, as you mentioned, it actually went from about 0.6 or 0.06 in April when the tariffs were announced to 0.39% today. So that kind of acceleration. So, that this labor data really matters, I think, next week. If it, as I said, if it is really strong, it could give the Fed a reason to not cut. So that's not in the markets right now.
So do you think the Fed's going to cut? What are they going to do September 17th? We want to know. Your firm is called FedWatch.
Exactly. So,
Advisors.
Exactly, Brian. So it is 85%. I think it's priced. The market thinks it's going to cut. It's going to happen. So I'm meaning like this payroll report would have to be 400,000 type of a range job report with revisions being positive for this Fed perhaps change their mind. But the market will change its mind then too, right? So it's priced. I think they will do it. But then from there, it depends a bit on how this data comes out. If strong data, good data, October comes in doubt, right? And that could add volatility to the markets.
So just to get a little bit deeper on this, the Fed balance sheet is what not too many people focus on. I know you do as well. 35 billion of mortgage-backed securities still allowed to roll off each month. That has an upward bias to the 10-year, which has an upward bias to mortgage rates. When are we going to see them cut that back? They cut back Treasury roll-off, but they haven't cut the MBS back.
Yeah, I think this meeting will be the decision to basically phase that out. Because if you start cutting rates and you do QT still on top and it is a mortgage issue, then I think that's the decision it will make. So they will phase out QT at this meeting.
You're talking about quantitative tightening.
Quantitative tightening, yeah.
Yes. And is that in some ways, Ben, I know we're going to go, is that some ways more important than the Fed funds target or no?
Well, it's a passive tightening, as we say, meaning that it's in the background, it's sort of happening, but it had probably kept mortgage rates higher than maybe where they should have been. So, yeah, it does matter.